Hey, welcome back. You know, I was on a video call with my parents in Dhaka last week, and my dad was telling me about the water tankers. How the neighborhood association has to schedule deliveries now, because the municipal supply just isn't reliable anymore. And it hit me, sitting in my apartment in New York, that this anxiety, this calculation about a fundamental human need, is becoming a global currency. It connects my hometown to places I've never been, like Phoenix, Arizona, or the almond groves of California's Central Valley. And it's being traded on screens just a few blocks from where I'm recording this right now. I'm Ibnul Jaif Farabi, and this is the unraveling thread. Today, we're pulling on a thread that leads from your tap to the trading floors of Wall Street. We're talking about water, but not the science of it, or the environmental poetry of it. We're talking about its price tag. The episode is called Data Drought: How Wall Street is Buying Up America's Water Rights. We often think of water as a public good, a right. But in much of the American West, and increasingly elsewhere, water is a legally separate property right. You can own it, sell it, lease it, just like you would a piece of land or a stock certificate. This system, born of frontier necessity, has created a vast, slow-moving market. And for a long time, it was a messy, local affair. Farmers selling to cities or to each other. But then came the data. Satellite imagery that could measure soil moisture from space. Predictive algorithms that could forecast drought severity and crop yields down to the acre. Suddenly, the opaque, fragmented water market became legible. And to the world of big finance, legible means investable. This is where our first thread unravels: the financialization of a public trust. Imagine a hedge fund. It uses these sophisticated climate models and data analytics not to warn of an impending crisis, but to identify one. They pinpoint agricultural regions where water stress is likely to spike in the next 18 to 24 months. Then, they quietly start buying up the water rights attached to farmland in that area. They might buy the farm itself, but often, they're just buying the water. They're betting on scarcity. Their asset becomes more valuable precisely when the community's need becomes most desperate. It's a classic play: buy low, sell high. Except the commodity isn't gold or soybeans. It's the thing that keeps a town alive. I want to pause here, because as an engineer, I'm fascinated by the data pipeline that makes this possible. It's a brutal kind of elegance. They're not just looking at rainfall totals. They're analyzing snowpack reflectance, groundwater aquifer levels from gravity-sensing satellites, evapotranspiration rates from specific fields. This data drought isn't a lack of information. It's a drought of context, of ethics. The numbers tell a story of yield and risk and return on investment. They don't tell the story of the small family farm that can't compete with a fund's bidding power, or the rural community whose water table is now an asset on a balance sheet in Manhattan. And this leads us to the second, more unsettling layer: the strategic acquisition of farmland itself. This isn't always a shadowy fund. It's often large, publicly traded asset managers and pension funds, adding productive agricultural land with senior water rights to their trillion-dollar portfolios. They present it as a stable, inflation-proof investment. And on one level, it is. But the incentive structure changes completely. A multi-generational farmer might fallow a field to conserve water for a bad year, to be a steward for the land and the community. A fund manager's fiduciary duty is to maximize returns for shareholders. In a drought, that might mean selling the water rights to a thirsty metropolitan area for a massive profit, even if it means letting the land turn to dust. The water is literally diverted away from the local watershed. The community is left with both a physical and an economic desert. I think about my own relationship with resources, coming from a place of density and scarcity to a place of perceived abundance. In New York, I turn on the tap without a thought. But this system connects us all. That almond milk in your coffee? The water for those almonds might be part of a tradable portfolio. The pension fund that a teacher in Ohio relies on? Its stability might be indirectly tied to the valuation of water rights in Colorado. The thread is invisible, but it's pulling tight. So where does this leave us? With a fundamental conflict between two visions of water. One sees it as an asset class, a component in a diversified financial portfolio, where efficiency is measured solely in monetary return. The other sees it as a commons, a shared necessity where efficiency must be balanced with equity, sustainability, and community resilience. The data and the capital are overwhelmingly concentrated on the first vision. The algorithms are optimizing for profit, not for people. This isn't a simple villain narrative. The capital flowing in can modernize infrastructure. The data can be used for conservation. But the core question is one of control and purpose. When the decision-making power over a life-sustaining resource shifts from local basins and state boards to distant boardrooms interpreting dashboards, we have to ask, who does this system ultimately serve? My takeaway is this: the next water crisis won't just be a climate crisis or an engineering challenge. It will be a governance crisis. It will be a question of who owns the data and who owns the rights and who gets to decide. The unraveling we're seeing is of the very idea that some things are too fundamental to be purely owned. As we perfect the data, we are imperfecting the social contract. Thank you for listening. If this thread is one you want to keep pulling on, make sure you're subscribed to the Unraveling thread wherever you get your podcasts. Share it with someone who thinks about water or money or the future. This is Ibnul Jaif Farabi for Light Not Studios. You can find more of our work and our full archive at lightnotstudios.com. Until next time, take care.